Hey everybody, my name is Justin, and today we're going to be taking a look at another super investor's portfolio, and this is Li Lu, who manages Himalaya Capital Funds. Now, according to Wikipedia, back in June in 2021, he managed about $18.5 billion. So he is not a small hedge fund manager by any means. Now, today we're going to be looking at his portfolio as of the end of Q4, which is only going to show his 13F filings, which are stocks on the American Stock Exchange. He is an international investor. He is actually from China originally. In fact, he's been compared to Warren Buffett, saying that he's the Chinese Warren Buffett, which is some great accolades if you're getting compared to Warren Buffett, certainly. So these 13F filings, because of the American Stock Exchange, does not cover all the stocks that he owns, but it's almost $2 billion worth of stock that he has according to his 13F filings overall. And he's been loading up on Google stock over the last couple of quarters. And in Q4, he added quite a few shares, which we're going to see here in a second. So we're going to take a look at what his portfolio looked like at the end of Q4. Then we're going to talk more about Google, maybe why he is actually buying the stock and essentially adding to it, because he's been adding into it for the last couple of quarters overall. So thank you so much for being here. This is the first video watched of mine. Again, my name is Justin. I'm a value investor myself, and I try to follow a lot of other value investor strategies that are out there. One book I just started reading recently is by Howard Marks called The Most Important Thing. I would highly recommend it if you have not read that book. It really kind of goes around emphasis around risk in general, and it's really kind of create a good foundation for me. I would say, as far as investing, I've been investing for years now, but certainly a great book to kind of rehone my thoughts on investing in general. So definitely recommend that one. That's out there for you guys. So let's go jump into the portfolio right now and take a look at what it looks like at the end of Q4 for Li Lu. All right, everybody. I am on a website called dataroma.com. This is a free website. I really like this one. It really focuses on value investors. You can actually go look at different value investor portfolios. So if I kind of scroll up here, there's a lot of ads on this platform because it is free. So just keep that in mind. But if we go take a look at super investor portfolios, so click on super investors, and you can literally go through almost 100 on here, different super investors. And I like this website too because they keep adding new super investors every quarter, it seems like. And some of my favorite ones to follow: Howard Marks, Li Lu, Warren Buffett. I like watching David Tepper, Josh Tarasoff, Robert Vinall. So there's a lot of great ones that are all on here. So definitely go check this website out if you can, especially if you're a value investor oriented in general. So we go up down here, take a look at Li Lu, Himalaya Capital Management. You can actually see his positions right here. So he is a guy that really has a concentrated portfolio overall. Keep in mind that these are only from the 13F filings. These are only stocks that he owned from the American Stock Exchange. He does own other stocks that are out there. Keep that in mind. Just this website only shows the 13F filings, all right? So if we go in here, you can see as of this past quarter, Micron is the largest one in his position, about 30%, Bank of America, 25%, Berkshire, 14%. But Google, so he has two different Alphabet stocks. So Alphabet is the parent company that owns Google, and they have different class shares that you can buy. So you can buy the GOOG and the GOOGL stock. So last quarter, he added 168% of shares to his GOOGL ticker symbol. So if we look at activity for him, it's kind of interesting. He's not super active. Not as many as some of the other investors that I see, but he does tend to have some activity each quarter. So again, he only bought Google stock last quarter, nothing for Q3, according to his 13F filings. Q2, this is where it kind of got interesting because he sold out of Meta stock completely. So if we go back to Q2 2020, which is down here, you can actually see he bought Meta Platforms and he bought Google at the same time, and he also sold Alibaba. So if you go back to that time frame, that's when the whole market just absolutely collapsed at that time. That's when we were going through the pandemic, and stock market just just tanked at that time. So he added two FANG stocks, Meta and Google. And then interestingly enough, he started adding more to his Meta platform stock the following quarter, then reduced it, and then he reduced it again. Then he added again, which was right after they announced the transition going to the metaverse. So that was kind of interesting. But then Q2 2022, so about 9 months ago, he sold out of Meta platforms completely, and then he started really adding more Google stocks. So he's really transitioned away from Meta platforms and really pushing that money into Alphabet, which is, I think, quite interesting, overall. So again, small concentrated portfolio according to the 13F filings. Now, there is another website I like to use too, which is called Ticker Terminal. Some of you guys may already use this already. I like Ticker Terminal a lot because it does show other filings besides the 13F. So if we go tracking investing gurus, they do have a free version on Ticker Terminal, and they have a couple of different paid versions. This is one of their paid versions. I am an affiliate of Ticker Terminal. If you're kind of curious, go check it out. I will have a link down in the description below. But I do like doing a lot of analysis, looking at the financial statements on Ticker Terminal because I can go pretty far. And they also have future estimates, which I like as well too. So if we look at Himalaya Capital, for example, which is Li Lu's fund. So the only other one that shows in here is the Postal Savings Bank of China. Now, he does own more than this. More shares, that is. Unfortunately, it may not show up in Ticker Terminal if he does not own more than, say, 5% of a company. It won't typically show up here, but he does have other positions. So if you know of other positions that he currently owns, throw it down in the comments section so we can learn from each other on that. But I just want to kind of show you this website as well too, and you can see that he was adding 168%. So it does mirror what Dataroma said as well. So why would he be buying more Alphabet stock? Why would he be buying more Google stock? I personally own Meta platforms and I own Google stock myself. So it makes me curious why he might be buying Google and getting away from Meta platforms completely. Now, if we take a look at Google or Alphabet's condensed P&L for last quarter, we can see some interesting things here. One thing I do want to point out, if you go to Alphabet's Investor Relations Center, it looks like a 3-year-old drafted this up. This is probably the worst investor relations website I have ever seen. Come on, Alphabet, you're a $1 trillion company. You got to step it up. This is awful. I don't think Alphabet does a great job on certainly not as good as a lot of the other companies that are out there as far as making things easy to find on their website and also putting together documents that can help investors learn more about the company. I think Alphabet can do way better than they're doing right now, personally. All right, so if we go back to Q4 numbers real quick, there's one thing that really stands out to me about Google overall, and this is one of the reasons why I bought into them. If we look at the Google Cloud right here, if we look at the difference between Q4 2021 and Q4 2022, which are these numbers right here, you can see the difference in cloud revenue. And keep in mind with Alphabet, with Google, that their largest revenue stream that they have is from advertising. So their Google search, their YouTube ads, the Google network, last quarter alone, almost $60 billion. So that is a massive portion of their revenue. In fact, if we just quickly do a percentage here. So let's say 59 divided by 76. So you're talking almost 80% of their total revenue comes from advertisements, where if you look at the cloud, for example, 7 billion divided by 76 billion, right? So you're only talking about 9% in total of their revenue. Now, what's interesting, if you look at the year prior and do the same thing, so you're talking, the Google Cloud was 5.5 billion. They did about 75 in total. You're talking 7%. So their Google Cloud business has grown as 7% of their business to 9% of their business. If we look at year-over-year numbers, you can actually see how much it's actually grown. So 7.3 billion divided by 5541. So you're talking 32%. So their Google Cloud business is growing significantly compared to the rest of their business. And if you know a lot about the cloud service, if we look at Amazon specifically, I mean, AWS has some really great operating margins overall, well over 30%. And Google, without that cloud service alone, has around 30% operating margins. And so as this business, part of their business grows, they're going to become more profitable, or they should become more profitable. In fact, if we go and look deeper right now, if we look down here, if we look at the operating loss by the different segments of their business here, look at Google Cloud right here, you're talking they had, a loss of $890 million a quarter a year ago, and then last quarter it was $480 million. So they're even though their revenue is getting better, which is great, it's grown 30%, that their losses have decreased year over year. In fact, if we look at what the losses are, we could say, so a year ago it was negative 890. And we're going to divide that by 5541, which is the revenue. So their operating loss was 16% a year ago in the same quarter, where this quarter, interestingly enough, was negative 480 million. And we're going to divide that by 7351, which is the total revenue for Google Cloud, and you're talking 6.5% loss. So that's significant, going from 16% loss to 6.5% loss. So I don't know if they're going to become profitable necessarily in 2023. Certainly the projection, it looks like in 2024, maybe they're going to be heading that way. But as that part of their business grows, their operating margins should grow as well. Another thing to mention about Google is too, some recent news that came out about them is that they actually got the NFL ticket, which does not seem like a big deal. DirecTV had that before, and they paid billions of dollars to be able to get that. But I do think that is going to appeal to new customers that are out there. You can actually go to YouTube TV. I think it's around $50 a month, and you can get all kinds of different, channels. You can cut cable, go to YouTube TV. I could really see a big transition over the next year or two with new customers cutting the cable cord or even other streaming services and then going to YouTube. So that may be another underlying revenue base for YouTube, for Alphabet going forward, just in general. Now, if we go take a look at a valuation for Google, let's do that real quick. All right. So you can value companies and with a lot of different methods that are out there. In fact, I offer a few different templates on my Patreon if you want to know how to value a company. This one specifically is based on operating income. This is one of my favorite valuations that I personally like to use. So essentially what I'm trying to do here is forecast sales for the business and then also forecast operating margins for the business. And then from there I can get future operating income and then discount it back to today to get that present value of operating earnings or operating income, and then figure out the intrinsic value from there. So what I'm basically saying for Google, if I'm going to project out, I'm saying, so they did $282 billion worth of sales in 2022, and I'm saying they're going to grow 6% this year, 12%, and 12%, 9%, 7%. So in 2027, I think they're going to do around $440 billion worth of revenue on the top line of the P&L. And then operating margins. This is where I think it gets interesting with Google. And keep in mind, this is the ticker symbol GOOGL. So just know that. So operating margins, this past year, we're around 28%. Analysts think they're actually dropped down 25, 26% this year. But I think they should be around 30%. I actually think that might be low for them, so we'll talk about here in a second. But based on a 30% operating margin, 5 years from now, I think that the operating income will grow around 11% per year, which gets us at an intrinsic value of $139 today, which is a 36% margin of safety based on a share price of $89. So this looks, actually, for me, I think this is fairly conservative. We go take a look at some of their historical numbers. Here, I do need to update these a little bit. The last trailing 12 months, I think, was through, I want to say, Q3 of last year. So I need to update Q4 numbers here. But if we look at a 10-year CAGR, so compounded annual growth rate for sales per share, it's 20%. You look at earnings per share, 20%, free cash flow, 17%, book value, 14%. The ROIC over a 10-year period on average has been 16%. Phenomenal business, absolutely phenomenal. You look at the operating margins, they've grown pretty much year over year. Now, they did dip a little bit last year. I think it was around 28% by the end of the year. But overall, it's a great business, a very conservative business. If you look at the FANG stocks, this is one of the most conservative or consistent is probably the best word, consistent businesses that I've seen out there. So, going back to my valuation, saying 9% growth on the top line when they've done 20% historically, it's only half. So I think that is conservative. Now, there are some projections out there that I'm seeing because of their cloud business growing so fast, and that should improve margins. I've seen analysts saying that should be around 33, 34% 5 years out. So let's just say 33%. So based on that, that would give us a $176 intrinsic value, and that's almost a 50% margin of safety. I don't want to be that optimistic. I like to be a little bit more conservative here. So I'm still going to keep it at 30%. But even still, over a 30% margin of safety, that at least tells me that this company is trading well below what the intrinsic value is based on these assumptions. If the assumptions are not correct, well, then the valuation is not correct either. All right, so hopefully you liked this video today. If you did, go and hit that like button. I love looking at value investor portfolios that are out there. So if there's one in particular that you want me to take a look at, it's a Howard Marks, Warren Buffett, or maybe somebody else, throw down a comment section. Let me know who else you want me to visit or revisit on this channel overall. But I love to hear from you guys as far as Li Lu's portfolio. What about Google? Do you think this is a good opportunity to be loading up on Alphabet stock right now? Do you own Google shares? Do you own the GOOGL or the GOOG ticker symbol? For me personally, I own the GOOGL, but I'm looking into possibly buying the other shares as well. Those are just different class of shares, and I don't know about you guys, but I certainly don't have billions of dollars worth of funds that I manage. So really, to me, I don't think it's a big deal buying either one, but it has to do with voting rights. So depending how much money you have, maybe determine on what shares you like to go with. But for me, it really doesn't matter either way. And again, if you want to know how to value companies, I do offer that on my Patreon, which I'll put a link down in the description below if you want to go check it out. You also get access to my Discord channel, and then also posts just to my Patreon members and videos that are on there as well too. So thank you so much for watching. Again, I really, really appreciate it. I'll catch you guys on the other side. Take care and God bless.